Home insurance premiums in the US jumped roughly 30 to 40% in just 5 years. But in some states, that number looks like a bargain compared to what's actually happening. Which isn't just prices going up, it's insurance companies refusing to sell you a policy at all. We're doing a full tour today. 13 states where the private market has quietly checked out and what's left behind for the people who actually live there. Spoiler, it's not good. But before we move on, please take a moment to subscribe to the channel and like the video. It is a small, easy, free way for you guys to allow me to keep on making this content and show YouTube that you like the content and you want to continue to see it. Thank you so much. Number 1 is Florida. Picture this. You just closed on your dream house in Florida and you're ready to pop the champagne, and then your mortgage lender calls and says you need insurance before this deal gets done. So you start calling around. Calling, and nobody's picking up. Or worse, they pick up and laugh at you. Florida isn't just expensive for home insurance, it's in a category all by itself. Premiums there are running up to 4 times the national average. 4 times! That's not a typo, and it's not because Florida homeowners are doing anything wrong. It's because hurricanes like Ian turned into islands into total losses. Insurers did the math, and then they'd rather just not insure. Number 2 is California. California's insurance problem didn't just start with one big storm. It started with fire season just never ending. And insurers quietly running these numbers on how many of these hillside homes they've got to pay out before they go broke. State Farm, Allstate Travelers, these are the names on billboards everywhere. And they've all either stopped writing new policies in California or pulled back so hard it's basically just the same thing. State Farm alone had 72,000 policies in 2023 renewed. Let that sink in. That's not market correction. That's a market exit. But here's what nobody tells you. Insurers weren't just scared of fires. They were also trapped by California's own rules. Let's look at number 3. Louisiana. Louisiana got hit so many times by named storms that meteorologists literally just run out of alphabet and start using Greek numerology. Every single one of those storms cost insurers money. A lot of money. So they just left. After Laura in 2020 and Ida in 2021, over a dozen carriers went either broke or just walked away. And here's what made it so much worse. Contractors and lawyers were filing massive inflatingly over claims over the storm damage. So when insurers were getting hit by both sides, catastrophic weather plus a legal environment that was basically on fire. The math ain't mathin', and they left. Number 4 is Texas. Texas doesn't just have one climate problem, it's got all of them. Hurricanes on the coast, tornadoes in the middle, and hailstorms basically all over the place. And then Uri happened in 2021. A cold snap so brutal that pipes burst in millions of homes across the state that was absolutely not built for that. Insurers paid out billions. Then they started asking whether they really wanted to keep doing this. Some decided, no, we don't. But here's the catch. Even the inland areas aren't safe. Hail Alley runs right through the heart of Texas, so even homeowners know that near the coast are getting slammed with massive winds and hail deductibles. Texas has a fair plan, but it was built to fix redlining in cities, not to replace entire private markets that's slowly backing out the door. So the state that practically invented the phrase "government stay out of my business" is now quietly depending on a government insurance program to keep its housing market running. The free market looked at Texas and said, no thanks. Let that sink in. Number 5 is Colorado. Everyone thinks California when they think of wildfire and insurance crisis, but Colorado snuck up on everybody. And then December 2021 happened, and the Marshall Fire tore through suburban Boulder County and wiped out over 1,000 homes. Normal neighborhoods, nice streets, places with minivans in the driveway. That's what got the insurance industry's attention, because wildfire wasn't supposed to do that in the suburbs. After Marshall, Colorado seen the exact same playbook as California did. Non-renewals, rate hikes, carriers quietly tightening what they'd cover. And the Front Range, where most Coloradans actually live, sits right up against the kind of dry, windy terrain that burns. Insurers notice this, and some people near the foothills are now choosing between their insurance bill and their mortgage payment. Number 6 is Nevada. Nevada is mostly desert, right? No trees, no forests, no real wildfires. Wrong. There's an invasive grass called sheetgrass taking over huge parts of the state, and the stuff is basically nature's lighter fluid. It dries out fast, catches fire easy, and burns hot. Insurers don't care what it's called. They just see fires popping up in places that never used to burn. And here's the thing, Vegas and Reno have been booming. New neighborhoods pushing out into exactly the kind of open lands where fire risk is high. So you've got more homes in riskier suburbs, right when insurance are quietly backing out of those same zip codes. The houses exist, the mortgages, they're there too. The insurance increasingly is not. Number 7 is Arizona. Arizona used to be the easy one. Sunny, dry, predictable. Insurance companies basically loved it, right? But here's what nobody tells you. Arizona is sitting in the middle of a megatrap that researchers say is the worst in 1,200 years. The land is drier, more flammable than it's ever been before, and some mountain communities say there now that the same wildfire risks is the same as California's. And it's not just fire. Monsoon flooding, dust storms, heat events that keeps breaking records. All of it is stacking up. Phoenix is one of the fastest growing housing markets in the country. And some of those California transplants are finding out that they just traded one insurance nightmare for another one. Let's take a look at Oregon, number 8. September 2020. Oregon had one of the worst wildfire weeks in its entire recorded history. Multiple fires exploded across the state in just a few days. 1 million acres burned. Old towns gone. Insurers noticed this. Non-renewal letters started going out across southern and central Oregon. People who'd been with the same company for decades getting a letter saying, sorry, we're out. No warning, just a letter. But here's what no one talks about. Smoke damage. Homes nowhere near the actual flames that got blanketed in smoke for weeks. They filed claims. And insurers built that into their risk model, so now the safe areas are getting caught in the net. Number 9 is Washington. Everyone pictures Washington as this cool, rainy, green paradise where wildfires are someone else's problem, right? But eastern Washington is basically high desert. It's dry, windy, and it burns. And in June 2021, a heat dome pushed temperatures to 116 degrees in parts of that state. That's not a Pacific Northwest thing. That's something completely new. Places like the Okanagan Highlands are getting bond renewals and rate hikes for years. The FAIR plan is becoming the default, not the backup. And here's the thing. People priced out of Seattle are spreading into suburbs and exurbs, buying homes, getting mortgages, and then finding out the insurance market in their new neighborhoods is razor thin. Number 10 is Oklahoma. Oklahoma gets hit by more tornadoes per square mile than almost anywhere on earth. You'd think insurers would have this totally dialed in and figured out by now. Priced in and accounted for without any surprises, right? But here's the catch. The storms are getting worse and the market is buckling under the weight of it. And it's not just the big tornadoes. It's the hailstorms, the severe thunderstorms, the constant drumbeat of smaller events multiple times every single year. Insurers look at that cumulative loss and they get uncomfortable very, very fast. Oklahoma doesn't have a strong state-backed safety net. So when private carriers walk, homeowners are basically on their own, paying thousands for thin coverage or going without entirely. Number 11 is Nebraska. Nebraska doesn't make the headlines. No hurricanes, no wildfires, no dramatic coastline getting swallowed by the ocean. But have a look at the insurance cost relative to income, and Nebraska is near the very top of the list. The reason is hail. It sits in Hail Alley where the atmosphere is basically a hailstorm factory. One storm hit Omaha in 2019 and cost over $1 billion in damage. One storm. One day. And here's what nobody tells you. Insurers have responded by having separate 1 to 2% insurance claims on a $300,000 value of your home. It's insane. Let's take a look at number 12, Illinois. Illinois doesn't scream insurance crisis. No coastline, no wildfires also, just the Midwest just being the Midwest. Stable, boring, it's good. Except it's not good anymore. Chicago has been hit with serious floods multiple times in recent years. Basements under the water, sewers backing up, rivers spilling over. And here's what nobody tells you. Your standard homeowner policy doesn't cover any of it. You need separate flooding insurance, and a huge chunk of Illinois homeowners, they don't have it. Throw in tornado risk on top of that, and insurers are quietly tightening up all these flooded areas right now. The FIO data shows that non-renewals spreading inland, and Illinois is on that list too. Number 13, Utah. Utah is the one that keeps me up at night, because the problem here isn't something that already happened, it's something that hasn't happened yet. The Wasatch Fault runs right through Salt Lake City, and geologists aren't saying a big earthquake might happen someday. They're saying it's overdue. The 2020 magnitude was a 5.7. Basically the fault clearing its throat, and most Utah homeowners don't cover this earthquake insurance. Like almost none of them have it. But here's what nobody tells you. Utah also has a growing wildfire problem on top of the seismic risk. Two separate threats, both underpriced, and a housing market that's been building fast to do in exactly the wrong terrain. State plans exist, sure, but they cost more and they cover less, and some of them are one bad storm season away from being broke themselves. The government becoming your only option is not the fix. That's a warning sign.